Mansa X, Oak Special Fund, Kuza Momentum Fund, and Zimele Balance Fund. 4 special funds that recorded amazing growth in 2024, with growth of up to 45% in 2024. But which one should you invest in, and which one is best suited for you? Today, we'll be looking at a side-by-side comparison of these 4 special funds. And for those who are new to special funds are funds that collect money from different investors and invest in different financial instruments such as stocks, currencies, ETFs. They can also invest in commodities and things like that. So if you want to invest in such instruments and don't want to go through the hassle of picking maybe one instrument or picking one share to invest in, then we have the fund managers to do all the work for you. So what you need to do is just give them your money, and they're going to look for the best places to invest your money, and then after that you are going to get your return, and of course at a fee. But at the end of the day, you get your returns and you don't go through all the hassle of identifying which assets to invest in. Yeah. In this side-by-side comparison, I will highlight the most important facts about each of the funds that we have mentioned, and this will help you narrow down your options quickly without getting lost into details. So ideally, I don't want you to fall into analysis paralysis, especially with so many of these funds out there that seems similar. So my goal here today is to help you stop overthinking or being lost in the details and take actionable steps towards making an informed decision in which fund to invest in. And once you have chosen the one that interests you, you can dive deeper and conduct your due diligence on that specific fund. And to help you with the due diligence, I have already done full video reviews on this particular fund, so make sure that you watch them after choosing which one is good for you. But first, we need to address some of the issues people have about these funds. Oh my goodness, the mixed feelings people have about these funds are just overwhelming. Here are some feedbacks I received on my TikTok account when I shared one of the funds. I think the loudest questions by far were, how do you trust a fund that offers 45% return on investment or growth? Isn't that too much returns or interest? A lot of people say that it sounds too good to be true. Others were asking if these funds are legit. Some people even say that it sounds like a scam. And I remember one person commented, they said, if it works like a duck, quacks like a duck, then it's a duck. And honestly, I hear you. I completely understand these sentiments. They say, when a deal is too good to be true, think twice. But I think most of us, we make a mistake by just thinking twice and not going deeper into understanding or to proving whether it's a scam or it's legit, or understanding how a fund like this achieves such a good returns or such returns. That's exactly why I'm here, to break down this concept and help you make informed decision before investing and understanding whether the investment is legit or not, okay? I was actually supposed to have 5 funds to discuss today, to review or to compare today, but during my research on one of them, I decided to leave it out or to not include it here. And the reason is, the person that I spoke to actually discouraged me from investing in it. And I thought, if people that are directly involved in the particular fund are not confident about the fund, why should I, or why would I recommend it to anyone? Interestingly, the fund did very well in 2024. It recorded over 40% growth in 2024, but in all the years before that, they had made losses, and maybe this explains why she gave me the warning. I was actually very surprised because not everyone will be that upfront about their particular fund. And then she went ahead to advise me to put the money in a money market fund. And I think my takeaway from this is always call before investing. And as Coach Susan from the Legacy Hub often says, you cannot afford to be a lazy investor. And I couldn't agree more. I agree with this 100%. Take time to understand or to do your due diligence before entrusting anyone with your money. I remember I shared this advice with someone on my social, and that person said, who has time to call them? and I was very shocked. To me, it's a no-brainer. You are entrusting someone with your money, your hard-earned cash. The least you can do is to take time to understand who they are and what they are offering. If not, you might as well give your money to anyone out there to manage your funds. We need to start taking due diligence seriously and learn how to invest correctly so that we avoid some of the mistakes that we fall into that are avoidable, okay? And this brings us to a reality that we all need to agree on. Investments come with the different levels of risks, and you are rewarded based on the level of risk that you're willing to take. If you are ready to take on more risk, the potential rewards are also high. On the other hand, if you are risk averse or you're not willing to take in any risk, or you're willing to take a very low risk, you definitely expect lower returns. All right. So low risk comes with low potential rewards, while high risk offers the chance for higher returns. Ultimately, you are rewarded in line with the level of risk that you're willing to accept or you're willing to take. And that's basically how it works. Low risk, low potential rewards, high risk, high potential rewards. And for those who understand how to invest wisely or correctly, the journey often starts with building an emergency fund in a low risk investment. From there, you can gradually move to riskier, higher return investment as your confidence and resources grows as well. And most importantly, do not put everything in a single fund. Remember to diversify. These funds are well diversified, but you also need to do diversification at a personal level. That being said, let us now look at the 4 special funds. And first, I want us to talk about the most important things you should know about these funds before investing. These are important facts, the must-knows before putting your money in these particular funds, and these facts will help you in choosing the right special fund for you as I compare these funds side by side. Number 1 is special funds mostly invest in shares, meaning that the returns are affected by different things such as economic conditions, politics, as well as the performance of the company that you have invested in. So depending on the fund, they are medium to high risk investment with high potential returns, and we have seen some of these funds going as high as 45% growth. So these are funds that are worth looking at, yes. Number 2, these are collective investment schemes, as we have mentioned earlier, meaning they collect money from different investors and they should be regulated by CMA and comply to CMA requirements for such funds. Number 3, the performance of the special funds are highly determined by the ability of the fund manager to make better investment decisions for the investors, and hence the need to know the team behind the particular fund or to understand the fund manager's experience in managing such funds or investments. And that's why I have done full video reviews on these particular funds for you to understand the teams behind these funds and to understand how long these fund managers have been in operation and the experience on such investments, okay? Number 4 is how well the fund is diversified, which determines how well the fund will do and the risk involved. And according to this research done on collective investment schemes, diversification was one of the major indicators of how well the fund will perform. And I think this is because it means they are able to lower the risk as they increase the returns for the investors. And if one instrument does not do well, it's very unlikely the investor is going to feel it. And to crown that, let me share this year where Oak Special Fund reported a loss in one of the instruments that they had invested in, but the fund still experienced a 29% growth because the other instruments that did well covered for the instrument that did not do well or reported a negative return. This is to say, if the fund managers are good in identifying great investment opportunities, then it means that this fund will give great returns to the investors while reducing the level of risk of the particular fund. And be sure to note this as we are comparing the special funds. You will see the performance of the funds that are well diversified and the level of risk involved in them, okay? Number 5 is, unlike money market funds, most special funds, they do not offer or they do not preserve your capital. And I'm saying most because, as you're going to see here today, two of the special funds that I'll be sharing here today, they do capital preservation, but most special funds, they don't do capital preservation, and there are chances that you might lose your capital or the principal that you have invested if the fund reported a negative growth. Number 6 is the fact that the strategy of the investment matters a lot when it comes to special funds. And as you're going to see here today, Oak Special Fund and Mansa X have a different strategy from Zimele Balance Fund and Kuza Momentum Fund. And the Zimele Balance Fund and Kuza Momentum Fund strategy is how many equity funds or most special funds operate, where when you're exiting the market is what determines whether you have made a profit or you have made a loss. Okay, what this means is, if for example you invested 10 Kenya shillings per unit, then the next day the price goes does maybe a 10x, then the day after that, or the day that you are withdrawing, the fund goes back to maybe 5 Kenya shillings, you will sell your units at this particular price, now 5 Kenya shillings. So for these two special funds, you buy at a certain price and sell at a different price. And as you're going to notice, the funds that use this strategy, they have recorded a negative growth at some point in their years of operation. And I want to put a disclaimer here. Only invest in these special funds if you already have an emergency fund, and do not invest more than you can afford to lose. And again, only invest 10 to 20% of your investment portfolio in a single investment, okay? Now, this is how I want us to go about the comparison. I'll be highlighting the different features, and for each of the feature, I will pull information for all the funds for easy comparison. I think this is the best way to do it, a side-by-side comparison, since we had already done individual funds. And let me know in the comment section if there is another way that you feel would be better. I would be happy to implement that in my future videos, okay? Because we'll be doing a lot of this side-by-side comparison. Now, we are going to start with the most important thing, which is the regulations, and I want to confirm that all these 4 special funds are regulated by Capital Market Authority, and they follow the requirements according to the regulations by the CMA. And you can as well see them in the list of fund managers, as well as the list of approved collective investment scheme in the CMA website. Still on this, the regulation says that they must have a fund manager, a custodian, and a trustee. And as you can see here, I have a table to break this down, and I have included how long the fund managers have been in operation, as well as how long the fund itself have been in operation, because I think experience matters, right? Let me know in the comment section if you think experience of the fund manager matters in giving better returns. Yes? So we are going to start with Kuza Momentum Fund. They have been in the market for 2 years, since December 2022. The fund managers are Kuza Asset Management, and they have been in the market since 2021. And then we have their custodians as KCB. The trustees are Cooperative Bank of Kenya, and they have not indicated their auditors in their fund fact sheet. And then we go to Oak Special Fund. They have been in the market for 1 year, that is since February 2024. The fund managers are Faida Investment Bank, and they have been in operation since 1995. The custodians are also KCB Bank of Kenya. And then we have their trustees as Cooperative Bank of Kenya, and then the auditors at Bayer and Associates LLP, okay? Then next we have Mansa X Special Fund. They have been in the market for 6 years, that is since January 2019. The fund managers are Standard Investment Bank, who have been in the market since 1995. The custodians are I&M Bank, and then trustees are Kingsland Court Trustees. And then you can see the auditors there. Then we have the Zimele Balance Fund. They have been in the market for 17 years. That is since April 2007. Yes, and then the fund managers are Zimele Asset Management Limited. They have been in the market since 1998. And then we have the custodians as the Standard Chartered Bank Kenya, okay? And then the trustees are KCB Kenya Limited, and then you can see the auditors right there. So after establishing if the fund is well regulated, we are going to look at how much you need to start investing, and I'm going to combine this with the fees and the lock-in period as well as the income distribution. Okay, table here, and we are going to start again with Kuza Momentum Fund, and you can see they have an annual management fee of 2%. Then they have a performance fee of 20% above benchmark, meaning that the benchmark is 12% per annum. So anything above that, you're going to be charged 20%. Yes. The minimum investment is 250,000 Kenya shillings, and the minimum top up is 100,000 Kenya shillings. The lock-in period is 6 months, and the income distribution is they don't do income distribution because you buy at a particular price and sell at a particular price. Okay. Next, we are going to look at Oak Special Fund with a 6% per annum annual management fee, yes, which is prorated daily, meaning that you're charged daily. Then for them, they don't have a performance fee. Then the minimum investment is 500,000 Kenya shillings, and then the minimum top up is 50,000 Kenya shillings. The lock-in period is 6 months, and then the income distribution is daily. So they distribute daily into your account, but you're going to be getting statements monthly. Then we have Mansa X Special Fund. The annual management fee for Mansa X is 5% per annum, prorated daily again, and then the performance fee is 10% above handle rate. Then minimum investment is 250,000 Kenya shillings. The minimum top up is 100,000 Kenya shillings. The lock-in period is 6 months, and then the income distribution is quarterly, and you get your statement quarterly. Okay. Then we have the Zimele Balance Fund. The annual management fee is 2%. The performance fee is, they don't have a performance fee. The minimum investment is 100 Kenya shillings, and the minimum top up is 100 Kenya shillings. They don't have a lock-in period, and they do not distribute the income because their strategy is you buy at a certain price and sell at a different price for you to make the profit. Okay. And talking about the income distribution, if you have come across the Zimele Balance Fund fact sheet, they have indicated that they do monthly distributions, but I have confirmed with them that there is no income distribution. As we have talked about, you buy and sell the unit at a certain price, and that's how you make your profit. And I think this is the next item we should discuss. So our next item is we are going to look at the investment strategy and also quickly go through the risk profile. I know that we have talked about the strategy a bit earlier, but I want us to go into more details on this. And we are going to start with Mansa X. So for Mansa X, you earn returns on your investment, which is distributed quarterly into your account. For Oak Special Fund, you also earn returns that are distributed to your account on a daily basis, but you'll be receiving a report or a statement on a monthly basis. These returns are basically incomes from different instruments that they have invested in. And after making a profit, they distribute them to the investor's investment account. You can then withdraw your money at any time, and you will get your money within 3 to 4 working days. Okay. For these two funds, as you're going to see in their asset allocation, they invest both locally and globally, and they also trade in other things like ETFs, precious metals. And the investment strategy also involves leverage trading, where they can trade more than they have, and forex trading, which means they can trade when the markets are going up or they're going down. Following this, the risk for Mansa X is rated as a 2, and they emphasize on capital preservation. Just like Mansa X, Oak Special Fund is also a medium risk investment, and they offer capital preservation as well. And although they invest in risky underlying assets, their investment strategy and diversification reduces the risk, and it's not as risky as investing in a single instrument or investing in a single investment vehicle. Now, on the other hand, we have Zimele Balance Fund and Kuza Momentum Fund, and in these two funds, your return are from capital gains. For these funds, you will only realize capital gains after selling your units. This means you could miss out on potential gains if you don't sell at the right time. So in such cases, it doesn't matter how low or how high the prices had gone in between. So even if the fund registered a 45% growth, you could still make a loss if you exit at the wrong time. The key takeaway here is to stay vigilant about your investment. Fund managers usually post the unit prices on their website and in the applications, so it's very important that you keep an eye on the prices. Also make sure that you engage your fund advisor. I know some of these funds, they give you an advisor to work with, so engage them to know the right time to sell your units. Okay, so the risk profile for Zimele Balance Fund and Kuza Momentum Fund is moderate to high risk investments. Okay, our next item that goes hand in hand with the strategy is the asset allocation. Let me share the images of asset allocations, and I want you to notice the similarities between the Mansa X and Oak Special Funds because they have the same level of risk profile and their strategy is also the same. And I also want you to notice the similarities in Kuza Momentum Fund and Zimele Balance Fund because they also have a similar strategy and also their asset allocation is almost the same. Okay, so far so good. Next, I want us to look at the most important factor that most of us consider when you want to invest in such a fund or in any fund, and that is the return or the historical performance of the particular fund, which you use to determine if the investment is worth investing in, right? So here is the historical performance of Mansa X, and you can see it has done very well over the years. And here we have the gross returns and then we have the net returns. You can go through it and see how this fund has performed. Next, let us look at the Zimele Balance Fund, and this is the historical performance. And as you can see, 2024 they had 41.81% growth on the fund, and 2023 they recorded a 1.53%, and 2022 they reported a negative return. And as compared to the benchmark, I think the fund has been doing very well as well. Okay, next we are going to look at Oak Special Fund, but before we do, if you have watched this video to this far and you like what I do here, don't forget to like and also subscribe to my channel. I commit to bringing you investment opportunities, reviews, as well as investment tips. I hope that you are learning, and let me know in the comment section what else you would like us to cover. Thank you for your support. So next we are looking at Oak Special Fund. This fund has been in the market for 1 year, that is 2024, and they have had a growth of 29.38%, that is the return. And here is a breakdown of how they performed each month. Next, we have Kuza Momentum Fund, and here is how they performed in 2024, and you can see 45.86%, that is in 2024, and here you can see that in 2023 they reported a negative growth of 19%. This is a screenshot of their 2023 financials. Let me also share their 2025 fact fund sheet. In January 2025 they reported a 0.93%, which is few points below the benchmark. The benchmark is 12% per annum, and we'll keep an eye on this to see how it does for next month as well. So now you need to go ahead and do your due diligence on the particular fund that you have chosen. Let me know in the comment section which one you have chosen, and thank you for watching. Thank you for your support, and happy investing. Bye.